Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, August the 29th, year's 2022. Let's talk trading. Trading is all about you. These videos are for educational purposes only. Your results may differ from mine. Yes, trading is all about you. There's a saying, life is choices. And then there's another one, actions have consequences. So when you think about trading, you make choices, you take actions, and then there are consequences. The consequences being profit or loss. And it's really interesting if you think about it that way because, if you're getting into psychology, trading psychology in particular, there's people have beliefs. And a lot of times your beliefs will affect your actions, which affects your consequences. So in trading, you have to make sure what you believe is true is really true. I know it might sound trite or simple or obvious, but sometimes the obvious isn't seen. It's right in front of your nose, but for whatever reason, you're looking everywhere except at the object that you desire at the moment. It's really interesting and it's kind of funny when you observe it in real time. So I hope you can understand what this has to do with trading. Um, it's because you sit there, you look at the chart, then you decide to trade. But long before you look at the chart, hopefully you figured out, that you want to trade, why you want to trade, meaning why are you trading in the first place? Um, that's a biggie. Why are you trading in the first place? Well, chances are it's because you want to make money. Either you want to make money to live off of in the present moment, or you want to make money to live off of in the future moment or in the future, or maybe there's something you want to amass some capital and then buy something like a new car, a house, a boat, whatever it is your goal is. But once you figure that out, then maybe you come up with a trading plan. And Walmart, who's on vacation again this week, always talks about having a trading plan. And we've talked about trading plans before. But the thing is, sometimes people stray from their trading plan, or they have their trading plan really complicated, or they might not even have a trading plan at all. They're just kind of winging it. And some people are good enough to wing it. Then, of course, we talk about risk management, not losing anymore on any one particular trade, and you're willing to lose on any one particular trade. But a lot of times that goes out the window because partially maybe ego, partially maybe you go on tilt, you start rushing in, you just don't stick with that one simple entry criteria that you have. And you have to remember when you push that button to enter a trade, there could be dozens or hundreds or thousands of traders all pushing their buttons at the same time to enter that trade, some in the same direction of you, some in the opposite direction of you. So it almost gets down to does it really matter the reason you enter the trade? I mean, does it really matter that I'm entering this trade here because this candle's red at the horizontal line? I mean, had I entered it here, I really wouldn't have had an opportunity, doesn't look like, to probably get in and out of that trade. Let's see, for some strange reason, can't seem to get that low. No, that wasn't the candle, this was the candle. 18.6. I would have had to been quick to take a pip. But if you take a look at the chart, you might think, well, wait a minute. This candle was green, this one's red, this one's red, this one's red. Maybe I should wait for the preceding candle to be red, then take the trade. But, you know, we're looking at the 1 minute chart. Switch over here to the 5 minute. So you can see here, there would have been the one trade right here. Actually, though, we're near the daily open. It would have made more sense to take the trade here. As I may have mentioned before, I've got the Walmart lines here highlighted in red and green. We've got the previous H1 high and low, red and green. We got the daily open here in orange. We got the previous day's low here in blue, current day's high in red. And one of the things I do is just, okay, whatever the first colored line that it hits, I know somebody's going to say that's racist, but whatever non-gray line I hit first, trade in the direction of the candle color. And usually I can squeeze a pip or two profit out of it. So right here, technically you would have been going long at the 23 at the open. It's already at 26, so you know there's a few pips that have been had right there, live, real time. So the next decision after entering is exit. Do I take 2 pips? Did I take the 3 or 4 pips that was shown? There's 3.5. And this is where it gets tricky. This is where statistics come into play. If you know statistically you can take 2 pips, maybe you can get that 90% of the time, you would take it. And then if it happens to run 3 to 3 or more, oh well. Because the idea here isn't to make money on any one particular trade, it's to make money overall. Well, see, now you're over 5 pips. Do you kick yourself for not waiting? Well, what does your method say? If your method says you take 2 pips, that's your strategy. You enter the trade, if you get up 2 pips, you take the 2 pips. Or you could have the strategy, you enter the trade, you wait for the candle to close. But you see here, if you had entered this trade, you could have had 2 pips. Actually 3. But then the market would have taken it back. And I talked about travel in last night's video. And you could see here how price is traveling. You've got 17 pips on the hour. But if you come down to M1 and you start counting, even if you just take the range high minus low, which we know travels more, you can see here it's a lot more than 17 pips. And let's see. And this hour right now is 6 minutes old, so we can just look from here. There's 12, another 8 or 9, 21. Another 8 is 29. Another 4 is 33 pips. Price has traveled. Even though the travel is even more than that because we have to double the wicks, but just to ballpark it. And so you see here, once again, if it was red at the line, but it was preceded by a green. So maybe your rules say you don't take that. It has to come off of a red. So, as you know, trading, whoops, it's like I have to plug the computer in. I'm using my laptop. I usually use laptops nowadays. That way, if I need to take it, I've got everything. I don't have to worry about transferring data and all that kind of stuff. So you see here, price broke out of that previous H1 high. It was at 33, went to 38. That was 5 pips. If you only grabbed 2, you made money. So your decision, you have to stick with it. Because trading is all about you. And the thing is, you can take one method, give it to one trader, and they lose. You give it to the other trader, they're profitable. So is it the method or the trader? Obviously, it's the trader. So the question is, what's the difference to make the difference? One is, if one follows the rules every time versus one follows the rules some of the time. Maybe one trader trades during the New York session and the other trader trades during the Asian session. Maybe they didn't do their homework to see when's the best time to trade that method. But let's say the method says the best time to trade is during the New York session, but still same results. One trader wins, one trader loses. What's the difference? Does one trader take every trade, or does one trader trying to filter out trades? Is one trader monkeyed with the method to an extent? Maybe they added a squiggly line to the method. So we will discuss this this week more and more. Let me know what you think. Send me a reply. What do you think the difference that makes the difference is? One trader, same method, it's maybe the same pair, but different results on 2 traders. Well, of course, it's because it's not what you trade, it's how you trade it, right? So go out there and drain the banks. This is the Rumpled One, over and out.